Well, now it's official. US has entered technically into a recession. US GDP contracted 0.9% in the second quarter of 2022, putting the country into a technical recession after two consecutive quarters of negative growth. In Q1 of 2022, US GDP dropped by 1.6%. So, based on history with recession, we know that economic activities will see some slowdown going forward. On the other hand, Europe is fighting war against inflation thanks to Russia and Ukraine. In Asia, we have China, which is handling the real estate issue. All this compounding into global economic slowdown. So, we all know when recessions occur, it threatens the investments made by people. In most cases, the value of stocks, real estate, and bonds take a huge hit. However, at the same time, gold tends to behave differently during a recession. Hi guys, welcome back to Options Decoded. With this video, we will take a closer look at the gold's performance during a recession, helping you to determine if investing in it is a good idea. Should you increase your exposure to gold for now or not? Before understanding how an Indian investor should see this, let's analyze how US markets and gold behaves during the past recessions. Only because there we have more data available due to the longer market history. So, let's see some past recessions and how equity and gold behaved then. Though there have been several recessions in American history, not all recessions are the same. For starters, different events can trigger a recession. During the Great Depression, equity markets fall more than 73% from 1929 to 1932. At the same time, US GDP declined by 26.7% from peak. The price of an ounce of gold went from $20.67 in 1929 to $35 in 1934. As the economy continued to worsen, the Federal Reserve tried to maintain the gold standard. This action technically contributed to the Great Depression, along with multiple bank failures and the famous 1929 stock market crash. US witnessed lots of recessions with their own reasons. It came in 1937, 1938, again in 1945, then in 1949, 53, 58, 1960, 61, 1973, 75, 1980, 1981, 82, and the list goes on. The Gulf War recession that began in July 1990 and ended in March 1991 was caused by an increase in loan interest rates that eventually slowed the economy, where US GDP contracted by 1.4% and the markets declined by 26%. 10 years later, the dot-com recession was brought on by the tech stocks over inflation, several accounting scandals, and the 9/11 terrorist attack. US markets corrected by 38%. Indian markets corrected by more than 50% in the same phase. The Great Recession that hit global economies in 2007, lasting to June 2009, was caused by many factors like the subprime mortgage crisis, stock market crash, and dramatic cutbacks in bank-to-bank lending. Indian markets corrected by more than 60%. You can see for yourself, during all times mentioned above, gold moved up. That's visible on the charts, right? Not just these. Due to other concerns also, gold prices can go up. For example, on the 2nd of September 2011, the persistent uncertainty over Americans' debt ceiling, ongoing Eurozone debt crisis, and the weak jobs report caused the prices of an ounce of gold to nearly double from roughly $1,000 in 2009 to $1,873.73 in 2011. Again, though this was not a recession, when Great Britain voted to exit the European Union in June 2016, the price of gold increased by $100 in just 6 hours. Brexit caused investors to panic, many of them turning to gold to protect themselves from a declining British pound and euro. At 4 p.m. on 23rd June, the gold prices was $1,254.96. By midnight, the prices increased to $1,347 as a result to the Brexit vote. In last 2020 recession, gold prices reached new heights, surpassing the previous record of 2011. On the 23rd of July 2020, the prices of gold closed at $1,882.35. However, the increase in gold prices did not stop there. With investors still concerned about the impact of 2020 recession, August saw gold prices increase to all-time high of $2,062.5. Right. This brings us to an important question. Is investing in gold during a recession a good idea? Well, market analysts and several industry professionals view investing in gold during a recession as a safe option. One of the main reasons for this is because gold has an intrinsic value. The value of an actual currency like a rupee or dollar depends on the country's economic stability and strength. Big investors prefer gold over the stock markets because in a recession, stocks fall as more companies start making losses or lesser profits. As an investment, gold can preserve the value of assets and encourage investors looking to diversify out of riskier stock investments. So, we can easily analyze that gold has historically performed well during the shaky economic times. It did well during the Great Depression, the Second World War, the 1974 oil price shock, and the recessions in so many years. This is impressive stability. Though all these reasons make gold a desirable investment options during recessions, there are few things that you should bear in mind. For the first time investors, though it is the uncertainty of the country's economic stability that makes gold an attractive investment option, gold prices can still be very volatile. Recessions, depreciating currencies, inflation, stock market crash, and banking collapse are not the only factors that would increase the prices of gold. If you look closely, gold was still growing in the value even at the boom period from 2001 to 2007. Though our focus in this video has been how a recession affects the price of gold, if you are thinking about investing in it, you should remember that the other factors affect gold prices besides the nation's economic cycle. One of the main factors is demand. Currently, India has one of the most significant global demands for gold. Should demand decrease, gold prices would come down. Another factor that affects gold is the supply. If supply increases, gold prices will decrease even if we are in the middle of a recession. So, how should an investor look at gold for now? Well, now, in the current ongoing recession, in most cases, the economic conditions should worsen. Gold prices will rise. Therefore, if you are looking at gold prices, it is often best to review how well a particular country's economy is doing. At the end of the day, gold is a commodity that in small doses promises to make an excellent diversifying element for your portfolio. Personally, I have increased my exposure to gold from 5% of my portfolio to 15% now. Once the equity markets give a decent correction, I will move back to equity. On the screen, you can see how gold has performed in last few days, especially before US GDP numbers and Fed rate hikes. See the spike. Hope you get the idea what the market is anticipating. Well, as you know, with this channel, I am trying to share with you to understand the personal finance, trading and investing in a better way. If you are interested in improving your financial future and take better investment decisions, make sure to subscribe to the channel and hit the like button if this video was helpful. In next video, I will cover how you can benefit from any correction in markets if recession hits global markets. Till then, as always, happy learning.